Hey everyone, thank you for coming back to the Proof of Pain podcast. Today I have a guest, Jim Crider. He is a certified financial planner. He's a CEO and founder of Intentional Living FP. So intentionallivingfp.com. That's his financial planning business. He is a dad, a husband, a dad of four, which he has me beat. I have three. He is a Jesus disciple, business owner, certified financial planner, and enjoys conversations and simple things. So thank you, Jim, for saying yes and showing up. I've seen your podcast before, and I really admire your traditional finance take along with the Bitcoin take. So I wanted to kind of get your background and kind of share a little bit about yourself.
Yeah. Thanks for having me on, Tony. I appreciate it. As you mentioned, I work in finance. I've worked in financial planning for a little over a decade now. So help with all things money. And part of that actually obviously has to do with Bitcoin. If we define Bitcoin as being money itself, well, I'm sure we'll get into that in this conversation of weaving Bitcoin, this black sheep of finance, into the role of financial planning. Have a bunch of kids and a wife, and try to balance obviously career and serving others and serving my family and managing money and time and really our resources. That's really what my job is for our clients, is how do we help people articulate what they value in life and then use their resources in the most efficient and effective way for that. And those resources can be their money, their time, their relationships, their talents. So obviously that's what we do. And that's what I navigate doing for myself and my family daily as well.
That's great. So I think you're in the field that I probably, if I could go back in time, I would probably be in financial planning. I think because it's a good combination of helping people and finance, which are the two things that I enjoy doing. So I guess, how did you even get into financial planning? How did your life kind of weave into finance?
I didn't know what a financial planner was or CFP is or anything like that for quite a while, and it was in my mid-20s. I was between jobs and was trying to figure out what I wanted to do when I grew up, and just started thinking about, I guess, just thoughts have been sitting in the back of my head for a long time. And those being one, financial stress. It's the number one cause of divorce. It's one of the top causes of suicide and personal depression. And then also just money conversations. You see this misalignment amongst families when it comes to their resources, and missed hopes and dreams despite having the resources that could have been there. So I decided, man, I would love to be able to help people, one, articulate what they value, and then also make sure they're able to communicate that both to themselves. So internally communicate, all right, here's what I value. How do I align what I have for what I say, what I value? And then also in the relationship of a marriage or family, whatever that looks like, of making sure that you're coming together and both being able to articulate what you value and aligning yourselves in that. So I didn't know what that meant. I didn't know what a financial planner was. I just knew I wanted to help people have healthy conversations about their money and then use their resources well. And that took me down this path of, getting into financial planning in a very basic role, and then basically just studied a whole bunch for several years. And that led to one thing to another. And I went down the rabbit hole of, all right, well, if I want to help people, I should probably learn more about taxes and estate planning and investments and retirement and all these things. So I just kept studying more and more and reading more. And that led me eventually to where I started my own firm about 5 years back. So we can really dive into the deep conversations I like to have with our clients.
A traditional financial planner doesn't dive into taxes and estate planning though, right?
At times. You could ask a room of 20 financial planners, what is financial planning or what do you do? And you'll get 20 different answers. So some people define financial planning just as investment management. So they'll manage investments passively or actively. Some people have on the business card that they're a financial planner, but really what they do is they sell insurance products. So they're less of a financial planner and more of a salesperson who just happens to sell a financial product itself. Other people do call it wealth management, where they're doing more tax and estate and comprehensive financial planning. And that's more of where we lean. Like we aspire to live anywhere and everywhere that your life and your money meet. Like that's what we do. Like when you're laying in bed at night and something is weighing heavy on your mind, or a conversation you and your wife are having about y'all's money, It's probably not about your mutual fund portfolio or just simply like, all right, how's my Bitcoin? It's something deeper than that. Even it has to do with your Bitcoin or your mutual funds. It's probably related to, hey, should we be putting this much money here? Should we, we've been saving this much for a long time. Should we go ahead and spend it? Is it worthwhile? What do we do for the kids with saving for their school? Do we save it in Bitcoin? Do we put it into a 529 plan? What will college look like in 8, 10, 15 years? Do we save for it in any capacity? Like those aren't directly investment conversations per se, but it's places where your life and your money intersect. And that's what we do.
It sounds like it's almost like a little bit of therapy too. Like you come in almost like a not a psychologist or a therapist, but you're kind of I guess you are kind of threading that needle, right? Of finance, personal relationships. You're almost like a therapist in that way.
How you use and spend and save and channel your money is very indicative of what you value. Again, your money is a tool that helps you articulate and fund what you value in life. And that's one reason that money can be such a leading cause of divorce is one spouse is using their money in one capacity, which is voicing I value X, and the other spouse is using the money in this other way that says I value Y. And maybe you really are saying something totally different. Hey, I value having things, and I value not having to work forever. And those can be, contradictory. Or at least, competing. But also I found in a lot of conversations that spouses, they truly value the same things, but the way they're trying to articulate it with their words and the way that it's being spoken with their resources is sending mixed signals, and that can lead to some arguments. So for instance, I didn't know this until after the meeting, and this was about 6 years back, I'd guess 6, 7 years ago. There's a family that came into our office and sat down, and we talked for a few hours. And by then the conversation, they're both crying, and it was a great conversation. And what happened there was we were talking for quite a bit about their what they've accumulated, their saving, their spending, their life. And then we peeled back and started talking through their goals and stuff, and what they're valuing. And they started talking about these frustrations they have with one another, and how she always just wants to save, and he always just wants to go and spend. And finally, they came to terms that, well, recently we went on a trip to Disney, and there was this huge point there where their marriage is about to blow up. And so we had them talk to me about this, and I believe it was the husband. His perspective was, well, we never go on trips because it was a dual income household making a whole lot of money. And they both work so much, they never get to go on family trips. And this was really important to them. So they went to Disney, and the husband was like, man, this, after like a day or two of being there, it's like, this is amazing. We should do this more often. So while we're here, he was already thinking through the next family trip, and he was savoring that moment, was thinking, man, I would love to continue doing this. So in his head, he was planning and budgeting for the next trip because he was enjoying the time with his wife and his kids so much. The wife also had those same thoughts. Wow, this is amazing. Being here with my family and actually taking the time to invest as a family is fantastic. But the way that she perceived it was, if we're going to be here, let's do it really big. I want this to be a special moment. So she was going out and she was buying all the things, and whatever, the turkey leg and the funnel cake and the Mickey Mouse ears or whatever you buy at Disney. She was going big. But the husband and wife, they both felt frustrated. She was looking at the husband saying, well, goodness, you're not even enjoying this one time. Might as well not even be here. And he's looking here saying, well, goodness, I want to do this more, but you're over here draining all of our cash where we can't do it again because you're spending on this one trip. They didn't know it, but both of them were saying, I really value spending time as a family. And how have we missed this? Let's continue. And they didn't know that until we were in the office talking through that. And that's why there were tears. Was, again, that was sort of this, they let me know after that conversation that they'd already gone to marriage therapists and counselors and all kinds of things trying to help their marriage. And they couldn't figure out what was the issue. And they realized in that moment, like, well, it's not as misaligned as perceived. We were just, again, their resources and their words were communicating two different things. But yet both of what the things they were trying to communicate was, I value you and I value my time with you, and I value our time with our kids. So again, that's a long story of that is what we do. A lot of our job, of course, there's a lot of technical stuff that we can quantify the value through. Hey, if we do X, Y, Z, it will save you X dollars in taxes, or, hey, your estate is misaligned here. If we can fix this, it will make if something happens to you, the transition to your beneficiaries a lot better, cleaner, less money to the IRS, whatever. There are those things, but there's also, hey, you said this is really important to you and you haven't done it for the last 7 years and your resources are not backing up the fact that you said it's important to you. What do we need to fix here? Do we need to change your words because you're not telling the truth to yourself? Or do we need to change your habits so you can actually do these things you said you value? And that's a big part of our job too.
Yeah. It sounds like I think you hinted at it earlier, where money is such a huge part of it. I mean, I think you said it accounts for a massive amount of suicide and just divorce and depression and whatnot. Money is it's such a huge part of our life. And you actually mentioned it in your interview. I think you were on a Christian podcast called Magnalia or something like that. You mentioned that there's a lot of financial planners, or most financial planners, are discussing finance and money 24/7 practically, yet they haven't really spent the time understanding what money is. And we're spending all this time and energy and getting frustrated with the idea of money and lack of money, or too much money and what to do with the money, and depression and all these negative things. And we haven't even most people haven't really defined what money is. Can you expand on that a little bit more?
Well, so I guess I personally would have two definitions of money. One of those being more the softer side. So money is a means of communicating what it is that you value in life, a tool and a resource to help you do that. And again, that's part of this. Well, if you don't understand that, you can have this issue of your words communicating something, but then your use of resources communicating something else. But then, you have the other side of things of what money is that we as Bitcoiners would ascribe to. And that's where it's odd working in finance. Is most of the people who work in personal finance, who are really good at their jobs, like these people who have spent years studying to get their certified financial planner or their CFA or CPA, these great designations, who are great at managing money. They can go deep with tax and estate and the retirements and their investment analysis and all these things, but they've yet to stop and ask, but what is money itself? And if you haven't asked that, it's hard to perceive that our current money situation is flawed. And if you don't perceive that our current money is flawed, and you haven't paused to define what money is, then you're less apt to recognize the need for a better monetary system. And then also you'll be apt to not put the proper value on Bitcoin. Bitcoin, if you don't understand what the issue is that it sets out to solve, you'll think that it's maybe a solution to a non-existent problem. You'll view it as a penny stock or just some speculative asset or a beanie baby or tulips, versus understanding that money should have these primary characteristics to it. And the US dollar and other fiat currencies do not measure up to those characteristics. And Bitcoin does better than any other asset that's been created or discovered in history. So when we actually define what money is, it seems like a no-brainer. But again, most people, even who work in money, have never stopped to ask themselves, what is this? And then lead to the natural conclusion of what does actually meet that definition best.
Yeah, there's a gentleman called Tad Smith that he was on I think he was on the Tim Kotzman podcast. It was maybe like a year ago. And he says that he's been teaching finance and I forgot exactly what he's studying, but he's basically done it for 20, 30 years. And exactly what you said is what he said, that he never actually took the time to sit down and really analyze what it is that we're talking about. Like, what are we talking about? And then once he kind of dove into it, he's like, oh my God, like this is something else. So I guess let's go back to how you discovered Bitcoin. How Do you remember how you found it, how that popped into your head, and was it an immediate click, or was it something that over time resonated?
Well, what I just described, this issue that most people face is Bitcoin being a solution to a non-issue. Therefore, it takes on these characteristics that don't make it seem logical, at least from a long-term investment thesis. Maybe a quick, try to make more money versus being better money. I first heard about Bitcoin in 2012. There's zero place on this mind map for me to place what Bitcoin is. I didn't understand it as being money. I never thought about what is money at that point. So brush that aside. Then 2015 came along and started hearing about Bitcoin more. But at that time, I placed it more in the category of being a speculative stock, something like that. And so again, improperly defining what Bitcoin is because not stopping to ask what money is. And again, I think we mutually agree that Bitcoin is money. Finally, late 2019, early 2020, when COVID started being a rumor that could be something, and hearing about these possible shutdowns in China and how it could sweep across the world, I started thinking about, well, goodness, this could have huge ramifications on everything, supply chains and culture and all these things. And I started thinking about how that could trickle down to our economy and our money itself. And that forced me to stop and ask, well, goodness, like, if that happens, like, how does that impact all of our financial resources and different types of assets? And fortunately, at that point, I was already familiar with the bond market, the stock market, and real estate, and precious metals, and these different areas. And the one thing I hadn't really gone down was Bitcoin. So I decided, all right, I need to spend a couple of weeks, figure out what Bitcoin is, so I can come to a proper conclusion of what of these assets is probably best hedged against this, both now and then really long term. And that became very important. It was right before the shutdowns actually happened, when it started talking like, hey, if this happens, don't worry, the government will help things out. And there will probably be some sort of universal basic income to help out. And that ended up being the COVID relief checks and stuff. It's like, well, wait, if the government can if everything's going to get closed, but the government's going to help people out, how do you just create money arbitrarily? That shouldn't be how money works. So that really geared me into, well, if they can just print dollars, I don't think that's how money's supposed to be. What's a money that can't be printed? And at that point, it was like, well, I guess real estate-ish, Bitcoin, precious metals. So that really was a forcing mechanism. At that point, it really did click very quickly. So that's when it was for me. And again, it had to come through asking the right questions to come to the proper conclusion. Had I not asked the right questions, I would have just spun my wheels, not making sense of it.
So you would say that the money printing is what led you to the conclusion that it's probably the best solution for that?
Yeah, I would say so. Again, it's looking at these characteristics of what money is and this scarcity. And if suddenly you can have a centralized party who can manipulate the scarcity or lack thereof, that doesn't seem like it's the best form of money. So, well, goodness, is there something else that would be a better measuring stick? If money's a means of measuring the value of other assets, but then the measuring itself, the measuring stick itself can be trimmed or added on as you're working with it. Suddenly, if you don't know during the middle of a project, is that measuring stick the same length it was when you started? Or now that table you've been working on making, is the table measuring the ruler, or is the ruler measuring the table? And if you have monetary units changing amounts regularly, you lose perspective. So yeah, that forced me to say, well, yeah, what is something that is less prone to this irrational creation or deletion of units?
I think about that a lot too recently with the advent of AI. I think you've mentioned a book as well from Jeff Booth, The Price of Tomorrow, where he basically argues that technology is deflationary, but we're fighting this inflationary system. So it's like this battle that is interesting, but it's going to accelerate, and it's going to accelerate to the deflationary side because of AI, right? There's this battle that's happening with AI potentially taking a huge amount of jobs. I think you mentioned UBI. I think I see no other solution, because you can only tax AI robots and LLMs and whatnot so much. I mean, there's only so much you can tax, I think. Short term, I think it's going to be painful for sure. But I think long term is going to be something it's going to benefit humanity, really. I mean, it should, hopefully. But in the meantime, the short term is going to be a lot of people losing jobs. And how do you replace those jobs? It's going to have to be, I assume they're going to have to print money, right? With the UBI. So does that strengthen your Bitcoin case or thesis?
Yeah, I agree. I've been thinking that for the last 7 or so years that that we will have some form of UBI by early to mid 2030s, and that my conviction of that has only strengthened with the rise of AI and what appears to be the inevitability of job displacement. And gosh, we look at that plus just social issues, and again, like the unemployment that we're starting to see right now. And gosh, this is only getting going. Yeah, I mean, COVID again, PPP and the COVID relief checks. That sort of was the cracking open of Pandora's box, with government can just give you money outside of other programs that have existed like welfare and such. But really, just hey, carte blanche, everyone gets money. Well, once you go there, the populace understands that it can happen now. So why would we stop? Then you have people start asking questions like, hey, if you can just create money, why do we pay taxes? Or hey, if you can just create money, why do we have people who are poor? Hey, if you can just print out a graduate degree, why don't we all have our masters? And it's this misunderstanding of value versus this thing is meant to represent value, but people really don't care. So yeah, I still believe that we will have UBI by probably 2034 is my guess. I'm probably really wrong there, but I don't see another way around this. Yeah, I think it will be really interesting. I personally, unfortunately, am on the more pessimistic side of things when I look at the impact of AI and robotics on civilization, humanity. I just can't imagine what the impact of our society if we have mass unemployment. Like, how's that going to impact birth rates, crime rates? I mean, people's mental health. I think people ascribe a fair amount of their personal value and worth on their career or their ability to provide value to their community. And if you remove their work from that, I think a lot of people are going to find themselves lost, unfortunately. So yeah, I don't see this working out great. Yeah, I think the government's going to want to step in and try to bring some order to it. But I mean, I don't see that working fantastic either. The government's going to give us so much money that we can pay back to the government in taxes and then give the rest to Sam Altman to use his technology. And then what we move to this like oligarch system. And again, I'm painting a really dismal picture here, but I hope I'm wrong. And my brain is too small to figure out. Even again, I'm sort of back where I was before I understood what Bitcoin is. I don't have a place on this mind map to properly put what I'm seeing, and I admit that. And I don't think many people really do understand how it's to be placed. It's sort of like the internet back in the early 90s. Like, when we look at the dot-com boom, the internet itself wasn't overvalued. It was the understanding of what the proper value of the internet is. It's like, oh, it's the value of the internet's not pets.com, or the value of crypto is not ICOs like we saw in the 2017 or so. It's something else, something more base level of how it's going to impact things. And right now, I would say that AI, quantum, robotics, like these will have a drastic impact on our day-to-day life. But I just don't know exactly where that impact is going to truly happen versus what my mind wants to go to as far as disruption, be it good or bad.
Yeah, I'm pretty much on the same page. I'm a little bit more hopeful. I hope. It's just in my nature to be a little more hopeful. But yeah, I think about it. That's why I say short term is going to be painful, but I think long term is going to be more interesting. So given everything that you said, how do you how do you explain that to your clients? How do you prepare them? Obviously, everybody's situation is different, but obviously you have a very strong thesis on Bitcoin, but you can't put everything into Bitcoin as a financial planner. You have to kind of allocate things correctly. So how do you see, given the money printing, given the potential loss of jobs, how do you allocate in this kind of environment? How would you think about like real estate? Having cash, I know that Bitcoiners are not a big fan of holding cash. Everything is like, like just all in on Bitcoin. So Bitcoin, cash, real estate, stocks, gold, how do you see these assets and things that you have at your control to protect somebody's wealth? How do you see it currently?
Yeah. Well, first off, I guess speaking specifically to Bitcoin, but then also each asset in and of itself, you have to have an understanding of what that asset is and why you hold it. And the thesis behind Bitcoin has not changed. It being sound money that can't be arbitrarily created by any centralized party is unchanged. Whether we have despite price movement or wars or AI or anything, so that is unmoving. Then also understanding the roles that stocks play, gold, real estate, bonds, whatever. Like each of these has their specific role, and each of them have risks. So again, you no matter what asset you have, you are taking some sort of risk. So you have to define what is the risk and what is the possibility or probability of the risk that I am exposing myself to. What's the possibility or probability of this happening, and not over in totality, but in the time frame that I will hold this asset. What would be the impact of that event taking place? We have to consider obviously things like sequence of return risk. Like if you think that Bitcoin is going to go to 5 million between now and 50 years from now, whatever, we'll say that, that's awesome. But let's pretend that all happens in year 49. And between now and then, it stays completely flat. And inflation between now and the next 49 years is 5% per year. Well, even if you own Bitcoin in that and it goes up, whatever that would be, massively between now and year 50, if you're retired and living off your Bitcoin, you could not sustain that. You would run out of money. So we have to define not only what's the or understand the impact of not only the total returns, but the sequence that those returns take place. And again, the different risks associated with different assets. So you own different assets because they essentially insure against different risks and also against other assets. So historically, let's just go back to the basics. Like a 60-40 portfolio historically has been held because, hey, equities tend to go up more than bonds. We need to take advantage of rising values, and we also need to insulate against inflation. So therefore, we're going to have about 60% stocks, and we're going to have about 40% bonds. And your reason you own bonds is assuming they will, in general, underperform your stocks, but as a buoy during those underperforming stock years to make sure, again, you're not running into bad sequence of returns during years of distribution. You can manage your drawdowns appropriately. So, the stocks themselves are to offset primarily inflationary risk, and the bonds themselves are meant to offset market risk with your stocks. And maybe you own some cash to offset risks you would have in both of those assets. But then you throw in other things like, well, goodness, what happens when you have currency risk, when you have different geopolitical risks? What happens when you have, these risks that are starting to creep their heads up as far as mass unemployment and AI and again, robotics and quantum and these things? How do you insulate yourself against these, or at least hedge? And that's where owning the proper assets at the proper scale is really important. And that's where it can be frustrating. I have frustrations in two camps. So I have frustrations with traditional financial planners who sit here and say, without thinking critically about Bitcoin, they just want to pretend that it doesn't exist. They bury their heads in the sand and they throw up something saying that, hey, it's Beanie Babies or tulips. And again, that comes without having any type of intellectual honesty or curiosity. Then also you have, a lot of Bitcoiners, and I would say this has gotten a lot better, but a lot of Bitcoiners on Twitter come in and say that, oh, the only asset you should own is Bitcoin. And if you have anything besides 100% Bitcoin, you're a bear and you just don't understand it, which might be easy for you to say, Mr. Anonymous on Twitter, who's 34 and got into Bitcoin somewhat early and is working a 9 to 5, and you plan on doing that for the next 30 years. And if Bitcoin goes up to $1 billion, then you'll retire early. That's a lot different than someone who's 64 and is retired and needs to manage their distributions. And again, we have to consider, like, what is the role of money? Money's there to help you do what's important to you in life. And if you run out of it because you're trying to prove something to Bitcoin maxis, I don't know what point you just made. That's like some sort of weird virtue signaling or maxi signaling. So we have to protect against all these different types of risk. And, obviously Bitcoin is highly volatile. And we could, a maxi argument like, oh, well, Bitcoin's not volatile. There'll only ever be 21 million Bitcoin. It's the dollar that's volatile. It's like, okay, in spending terms of Bitcoin is volatile. Like the things you want versus the ability to purchase those, we have to make those align. And I don't want to get caught up in this game of trying to be out maxi people. And again, that's coming from someone who the majority of my net worth is in Bitcoin, but understanding that we can't jeopardize people's financial situation to prove a point. So holding it responsibly, allocating responsibly, and then also understanding what assets you should own in tandem with that. So like, okay, maybe you hate fiat because, it's antithetical to Bitcoin, but you need to own some fiat in order to offset the short or more midterm volatility of your Bitcoin. Again, you're holding it as insurance ultimately, so you can actually own more Bitcoin in the long run. If you need $100,000 today and you own 2 Bitcoin, 6 months ago, you would have just need to sell 1 Bitcoin. And now you would need to sell almost 2 of those because you were 100% in your Bitcoin. So yeah, anyways, you get what I'm saying.
Yeah. I mean, I definitely agree because I've been in the camp too, and it's tough. I'm not going to say risky, but if the only other way to do it would be to borrow against your Bitcoin, especially if you're borrowing, if your leverage is too high, then margin calls and that kind of thing is just it's tricky. I wanted to ask you. You mentioned the 60/40. A lot of people have mentioned that the 60/40 is broken because the bonds aren't performing as well. Do you agree with that, or do you see like there's like some sort of a shift?
I don't know. I'd say that the time frame for us to block that in is relatively short. So I'll state this a few ways. For our clients, we generally do not allocate to a 60/40 portfolio, even for our retirees. And even for our 40%, that is not typically 40%, generally are not holding this large basket of totally diversified bonds. But right now we're leaning more towards like money markets and ultra short duration bonds at a lower than 40% allocation. That's just right now. And that's our average client. And that's not financial advice for you. I don't know your situation, but yeah, that's really what we're looking at the moment. Now, yeah, sort of not hedging my language, but if we want to look at it over a long perspective, like there's a guy who created the 4% rule. I don't know I'm sure you've heard of the Trinity study or the 4% rule that took place. Okay. So yeah, Bill Binion created the 4% rule back in the 90s. And that was created by, these goofy talking heads were saying, hey, the market's up by 12%. Therefore you can spend 12% of your portfolio and you'll be fine if you're retired. That's a terrible idea. It might look good short-term, but long-term, what happens if the market's not up 12%? So Bill went and did some studies and said, all right, over the worst drawdown periods in history, if you retire and you live in retirement for 30 years, what would be the initial withdrawal rate from your portfolio that you could take initially and then adjust that annually for inflation? At 30 years, you still have $1 to your name. That number came out to about 4.2%. That'd be retiring in like 1929, 1970. 95% of those scenarios, roughly, if you only spent 4% of your portfolio, you actually end up dying at 30 years with 95%. 95% of the time, you end up dying with as much, if not multiples more than you started off with. So now, but with that said, I'm bringing that up because Bill did that study going back to early 20th century data. He redid it, I believe, in 2019, going back to mid 19th century data with a larger diversified portfolio. So we can say, well, looking at our bond situation right now and saying the 60-40 is dead could be very short-term focused. Now, with that said, I would personally, I'm arguing out both sides of my mouth because I want to think critically about these things. But I would say that, well, $39 trillion of debt here in the U.S. alone is cause of concern. And I think we're starting to see the ripple effects with that, both with agency ratings of U.S. debt, BRICS nations, lack of trust, the concerns with the petrodollar system. All these things would say, man, maybe owning a whole bunch of like a 60-40 portfolio, maybe that's not the best way to go. Or considering the duration of your bonds, you might want to put some more thought into it as well. And now maybe a couple years from now, we look back and say, man, what an idiot. It was clear, quote unquote, clear in hindsight that the Fed was going to drop interest rates. So you should definitely own long duration bonds because historically with long duration bonds, when interest rates go down, bond values go up. So why would you not own long duration and hold on to short? But again, you can marry that with the trust in the system and the unknowns. And heck, we've all been assuming the Fed's going to drop rates for a year now. And here we are. And I think yesterday they announced that they're going to stay put and inflation remains high. And I don't know what's going to happen. And that's why, the good and the bad of being diversified. If you're diversified, you will always have something that disappoints you. And that's the purpose. That's what's going to happen. And again, maybe I don't sound like a Bitcoin maxi because I say, hey, you should probably own a handful of things, but I ultimately say that because I want to have insurance against the Bitcoin that you own. And I want your Bitcoin to insure all the other things that you have as well.
Well, you're being responsible, right? That's literally your job. You're supposed to be thinking of all these things. You mentioned the money markets. So I believe, if I understand correctly, short term, you see cash or money market as being a pretty powerful position to be in.
Yeah, frankly, the markets for the last little while has been pretty darn big head scratchers. So I'm sitting here like, all right, what do we own? Do we lean into the U.S. or international stock market? In my opinion, it seems like it's wildly overvalued. But again, Warren Buffett's words is the market can remain irrational far longer than you can remain solvent. So irrationality, despite me looking here and saying that, hey, it seems overvalued. Well, market might not care about that. The market doesn't care, my opinion. And then, at the same time, we could sit here. Maybe it was in 2021 when house prices and the price of everything kept going up. That was a tough time because you're sitting here saying, like, I had clients come to me, hey, Jim, I want to buy a house in the next year or two. What do we do about that? It's like, well, the town I live in, house prices in 2021 went up by 30%. So if you're sitting in cash and you want to buy a house later that year, your purchasing power for that house just got eroded by 30%. So what do you put your money in stocks, hoping to keep pace with the inflation rate of real estate? But what if in that time frame, what if the stock market drops like it did the following year in 2022? Now you're just further behind on your purchasing power for a home. Do you keep it in cash and experience the erosion? Do you drop it in bonds? And at that point, that's when the Fed upped rates. So again, that's just that scenario. But right now, when we're sitting here looking around saying, okay, what do we own at this moment? I feel like Twitter and Trump and the news is announcing a new war or invasion or something on a weekly basis. Gold is, gold's down a little bit for the last couple of weeks, but we're basically teetering on historical all-time highs on gold prices. Now, is gold, is this the canary in the coal mine and gold is only starting its run? Or will we look back in a few months and anyone who's holding gold currently say, wow, I should have definitely sold. It was at all-time high. That was silly of me not to take advantage of that and sell it. Or again, is this simply the beginning stage of this distrust in the system and we're just getting started? Again, is our equities massively overvalued and we're sitting in 2007? Or is that just a convenient narrative to follow because it's still fresh on our mind from 20 years ago? Bonds. Well, goodness, if you're saying that everything else is overvalued, bonds and cash should be the safe haven. Or will Trump tweet something tomorrow that says that the world's at peace again and no more wars. And suddenly, if you're sitting in cash, then you just lost this K correction. Not that the market hasn't dropped that much, but if you got out of the market back in March, April of 2020, when the market obviously just rebounded massively, like you had this K-shaped correction. If you got out of fear, you were toast. You missed out on this massive run up. So we're sitting here saying, hey, I don't know. I'm not going to pretend I know what's going to happen. And if you know what's going to happen, that's awesome. Good for you. And you should probably manage a bunch of money and go hang out in the Cayman Islands. I don't know. So what's the narrative? What's the thesis? Historically, how's this been treated? So we're sitting here looking at the 1990s. We're looking at the 1970s. We're looking at our current debt levels. We're looking at AI, what could possibly happen with that, stock valuations, interest rate, debts, the unknowns. What do we own? We should probably own a whole bunch of things, and come to terms with we're going to be wrong about something.
Yeah, I agree with that. I wanted to kind of bring up the Bitcoin treasury companies, because that's kind of how this podcast kind of started. And I wanted to get your perspective as a financial planner to see do you even see a benefit for your clients to have Bitcoin treasury companies, or is it just better to just be in spot Bitcoin? How do you see strategy, Strive, Metaplanet, all these companies that are leveraged? How do you see it? Do they play a part in your portfolio structures? I just wanted to see what your perspective was.
Yeah, so strategy has in times played a role in our portfolios. For the like managed portfolios that we run, we have exited strategy as of quite a while back. I don't know if we'll get back in eventually or not. I'm definitely open to it. Of course, strategy itself has multiple products. It's not just strategy, the common stock, but their preferred products. And that's a question I get regularly, is about Stretch. Should we own that? And that's
my next question. Yeah.
Yeah. I mean, we had someone reach out yesterday, and this is something that we regularly talk about. We have held Stretch in the past. We don't own it right now in our broad manage accounts. A few of our clients own them in like specific one-offs, even like strategy and a few things like that they own in sort of one-offs. But Stretch right now, that is a huge, in my opinion, a wait and see. If we have a massive bear market in Bitcoin, and if strategy succumbs to further drawdowns and it lasts for a long period of time, and let's say we come out of this with the next halving cycle, whatever thesis you want to follow, and if it's a few years before Bitcoin pumps, if strategy survives that, and if Stretch survives it, and it stays around 97 to 101 and continues clipping coupons, then that'd be incredible to witness. And that could be game changing when it comes to retirement income planning. I mean, suddenly you just went from let's use Bill Binion's 4% safe withdrawal rate, or if you use what's called guardrails or ratcheting system on some sort of distribution rate, maybe you just went from a 5.5 up to a 7 or 8%. So now if you're sitting on a $2 million portfolio, if you use a 4% rule, you're only sitting at 80 grand per year coming out of your investment account. And now you're sitting here like, well, I can replace some of my fixed income or maybe even some of my stocks with Stretch, and bump up my distribution rate from a 4 to a 6.5. I mean, goodness, you just bumped up your distributions on $2 million portfolio by 50 grand per year. That's pretty wild. So yeah, we're asked about this regularly. The problem is I recognize the amount of cash they're sitting on, the amount of Bitcoin they're sitting on, and what a lot of people would say is the improbability of this coming to anything that'd be devastating. But there's always the black swan. And my issue is I don't even know where to look for the black swan or what it could be. And that's why it's a black swan. Obviously these people thought that black swans didn't exist, and they weren't aware that it shouldn't even be on the radar. And to pretend that I would know what the black swan is would be insincere of me. So maybe there's not one. Maybe the black swans are all accounted for, and the cash barrier, the stock barrier, their flywheel to continue to issue more shares, more debt, more preferreds, whatever, is already covered all the bases. But where I sit right now, personally would say, let's wait and see. I don't want my clients necessarily to be the guinea pigs with this. If it survives a bit, then we'll start looking a little bit deeper. Again, I was coming from, we have held it in the past. Some of our clients own some of it right now, but we're not largely using it in portfolios right now. But I am curious, like, my goodness, if it really does work out, and we see longevity with this and sustainability with this type product, not only for retirement income planning, but like, let's get Bitcoin out of the way for a second and just look at it in terms of a traditional portfolio. We're sitting here saying it's going to issue a 11 or so % coupon regularly, outside of being diversified and risk and whatever, but just looking at that as your hurdle rate. Like, it's hard to justify owning a stock like other stocks when your hurdle rate is now 11% on a preferred. So yeah, 11.5% is your hurdle rate that I can get by owning this thing. Like, okay, how does that not only change retirement income planning, but just general portfolio strategy, when that is the new, like, all right, instead of owning a money market hurdle rate of 3.5 right now, it's 11.5. Like, what do we do about that? And I'm pretty curious to see how this is going to impact things over the next few years.
Yeah, no, I mean, you basically took the question right out of my mouth, because I see this as an unknown. Everybody's calling it the iPhone moment for strategy. Everybody's very hyped up about it, and I see equally good and equally not scary. That would not be the right word, but just the black swan events, like you were saying. So yeah, so 11.5%. I mean, if you tell this to anybody, and in traditional finance, and it's insane. I don't know if you can see my screen.
Yeah,
that I'm sharing here. So they have that. Stripe has SATA, SATA, and they're at 12.75, I believe. Let me see if I can scroll up. 12.75. The interesting about SATA, which, kind of, maybe I'm misunderstanding it, but I think with SATA, they put $50 million into Stretch itself. I hope I didn't get that wrong, but I'm pretty sure that they did that. Yeah, they're at 12.75%. Yeah, so that is, I don't know. What do you think about that part?
I mean, if you're trying to get it, if you're issuing a 12.75 and you need to create that income stream, then how do you create that sustainably without just constantly going and issuing more and more debt that suddenly you're running into the possibility of a Ponzi scheme, possibly, of just creating more debt so you can keep paying those rates? You better find something that's going to relatively risk adjusted, get you to that hurdle rate. So what can you do with that? Well, it's like, I believe that Bitcoin will outperform 12.75 on an annualized basis over a long enough period of time, but we also have to consider the short term. Well, what do we own in the short term that's going to get us close to that? So whatever this portfolio we're constructing is, if Bitcoin can carry us a good amount of the way there, what else do we hold in that? Like, there's only so much cash maybe you should hold. And then, all right, well, where else do we look? Yeah, I could see why Stretch would be a go-to choice. I don't know. I have good friends that disagree with me on this stuff, and we have fun conversations, and I'm probably really wrong and too stupid to understand it. But I don't know, my viewpoints a year ago right now, I was talking with a few buddies of mine, and I was like, I'll probably take some heat for saying this, and I don't really care, is I wish that these companies who are Bitcoin treasuries could take all this Bitcoin and reinvest in their companies to make them better companies, where you're actually a profitable, sustainable company that made a good or service that was, again, profitable and could issue or create value as the company itself. And then, the response is, well, the Bitcoin is the value. That's the product. And I don't love that. I think that we're already seeing that with just going and buying a bunch of Bitcoin and saying that, hey, this is an infinite flywheel and it's debt on Bitcoin. It's going to outperform. Like, we're already seeing that house of cards start to fall unless it's structured really, really well. You're an early mover. You have a lot of cheap debt. You're able to keep perpetuating this. And maybe it's just maybe I'm overly conservative, but from a long-term sustainable point of view, I would say, well, what if you took some of those proceeds and built something else to diversify your business and had multiple income streams? It's like, hey, this operating company behind the scenes does X, Y, Z. Maybe that's what strategy will eventually do. They'll become a Bitcoin bank, and that is the operational company that is wildly profitable. And then they have Bitcoin on their balance sheet, which is awesome. But just say, hey, we own this balance sheet that is fantastic. Maybe that's enough. And that's what all of the big people out there who are really into these treasuries to say. Is like, it is the asset on their balance sheet. That's the value of the company. And I could argue that side, But from a risk perspective, it'd be nice to see them investing into the operational side as well. Again,
Yeah.
maybe the operational is the balance sheet, but maybe I'm too caught up on the historical lens of what a company is or should be. Maybe I'm outdated and just not understanding it yet, but I don't know. Maybe if some of the companies have already gone belly up, maybe if they would have invested into their operations rather than issuing just more debt, maybe they wouldn't be belly up yet.
Yeah. So I've brought that up a decent amount of times because I own a small business as well. And I need cash flow. I mean, I need profit. And if I were to just buy things that appreciated, there's only a few tools that I would have. And when I brought this up to other people, they basically say, well, why invest in anything else that's going to underperform the CAGR of Bitcoin? That's always what I get pushed back on. And I'm like, I get it. I mean, I understand what you're saying, but you also understand that the CAGR is, that's an average. You have years that are negative. And what happens during those years? Unless you're sitting on a nice pile of cash that you can pay these dividends out, they just want to put 100% of their disposable cash and profits back into Bitcoin. I see what you're saying, that you need a business, you need profits, you need cash flow, because cash flow can be so I guess that's the differentiator for me. There are Bitcoin treasury companies that just like a strategy, and then there are companies that are profitable that have Bitcoin on their treasury. And I think a lot of these companies are going to end up doing that, and that makes more sense. That's just more that's a healthier way to go about it, I think.
Yeah, you could argue that, well, if Bitcoin goes up by whatever CAGR, is your business going to outperform that? And if not, just just invest in getting more Bitcoin. It's like, yeah, I could see that, but what if that doesn't happen? What if it doesn't hit the CAGR? What if what if the operating company you could build would be better? Yeah, there's merits possibly in both. We'll have to find out. Again, maybe I listen to this in a few years and I look back and am a fool, but I don't know.
Well, speaking of black swans, what you were saying, I referenced Richard Byworth, that I had an interview with him like a week or two ago, and he mentioned that there is what he sees as the biggest risk is there is a central bank that is in a regime that's not friendly to Bitcoin that can print infinite amounts of dollars, and they can go on the futures market and short the living, out of Bitcoin and drop it to some insane levels. Like, let's say, I think he suggested all the way down to 5,000. And then they would just flip the switch and then they would be the buyers. So that would be, I would think, the black swan, right?
Yeah, possibly. Again, the black swan is something that's going to come out of nowhere. It's like, how didn't I think of that? And so I don't have. Over the years, I've learned that I just don't know nearly as much as I would like to admit that I would like to be able to say that I do. Again, that goes back to our conversation about AI and what's going to happen with job displacement or with abundance. Like, I don't know. I think I'm smart enough to recognize that I don't know. And there's people who are smarter than me who could say, like, I do know what it'll look like, or at least I have a better informed guess. But at that point, I would say it's still a guess. And then, yeah, you have these things like, with Bitcoin, it's like when you look at the possibility, some might argue the probability of further governmental shifts to, move into the space, the implications that can have on the price and the possible manipulation. Like, yeah, if you have control over the fiat that's going to be used to purchase the Bitcoin, how will you use that? Will you take liberty and manipulate things or not? Like, I have no clue. And will it be used as a tool to just try to beat down Bitcoin as much as possible? Like China did a few years ago by banning Bitcoin weekly in some capacity, or will it be used actually as a trick to manipulate the price, actually to accumulate so it's short term? Let's say that happens. Bitcoin is manipulated down to 5,000. We're not going to know which one it is. Like, crud, governments are stepping in and pushing it or something. We're all going to be on Twitter like, what's happening? Who's doing this? Why is it going down so much?
Yeah.
And even if we knew the government is doing this, they're pushing Bitcoin down. There's going to be people who are sitting here saying they're pushing it down. It's going to be like this permanently. we should have always known it would be gold that you should go to, things that are tough to pull out of the ground. And Bitcoin is easy to manipulate. And there's going to be other people saying, hey, this is it. They're doing this so they can buy all the Bitcoin on the cheap. I'm not going to sell to the government. And in that moment, we're not going to know who's right. And then we'll look back a year from then and say, it was so clear that XYZ was the right thing to do. Again, this is all coming from someone like I own a lot of, like, most of my net worth in Bitcoin, and I long-term believe in this. I do think that governments will be buyers, forced buyers of this. I think that everything is good for Bitcoin. I think that we will have continued money printing. I think centralization of currencies is a huge issue, and that Bitcoin is the solution to that. I think Bitcoin is the best form of money that's ever been created or discovered, and that's inevitable. Well, the inevitability of Bitcoin is not a given. You can't just create something and just assume it's going to be adopted properly and used properly. There have been people over the last 17 years who have been advocating for the proper use and for the continual spread of Bitcoin. There are early days of Bitcoin faucets just to get it in people's hands. Like, it wasn't inevitable, but now we look at it, it's like, okay, if this continues at the proper stewardship, then the inevitability of it will persist. So, yeah.
Well, I've heard different people say that Bitcoin my Bitcoin thesis will fail if Bitcoin drops below 15,000 or something like that. Are you on the camp that your Bitcoin thesis will fail because it goes down to a certain number and that's when it failed? Or are you on the camp of Bitcoin, as long as Bitcoin continues to work, it hasn't failed? What do you think?
I guess we go back of like, okay, Bitcoin, what is it? And again, Bitcoin is money, and the roles that money can play. Right now, it's primarily obviously store of value, at least for people in the U.S. It is obviously there is a group of people who are going to use it for day-to-day trading and stuff, but primarily store of value. If eventually, I would love to see Bitcoin move and take over those other two roles that money can play in society, sort of like unit of account, that sort of thing. So I would love to see that. Now, if we say that right now the store of value just gets annihilated, there's going to be people dancing on the grave of Bitcoin. But what time frame are we looking at? When Bitcoin dropped in 2020, when I was first really going to this rabbit hole, and it dropped by 40% in a day, there were people who were dancing on graves then, but the other people who were selling chairs. So did Bitcoin fail in that moment? No, it was temporary dip. Did the internet fail in the early 2000s because we had the dot-com bust? No, it was just a misunderstanding of what we had at our fingertips and this misapplication. Going back to what I said earlier, like at that time, I don't think the majority of people didn't understand what the value of the internet was. And I think it's where we're at right now is we don't understand what the value of Bitcoin is. A lot of people look at Bitcoin and say, oh, the value of Bitcoin is blockchains, so we need to put everything on a blockchain, versus the value of Bitcoin is money. We need a better form of money. And we have Bitcoin as first mover. If we create another thing identical to Bitcoin still went out because you have these early adopters and first movers advantage. So again, going back, why is this valuable, and determining your measurement of success or failure? Okay, I was thinking about, this is sort of off topic, but still somewhat related. I was mowing the lawn last night, and my kids were running around, and I was thinking about, my oldest is playing baseball, and there are some kids in the league that are really good. There's some kids that are really bad. And there's some kids that are just decent. And like in the major leagues, you have some people who are good from like prodigies from they were a kid, but you have some people who weren't good until they just kept with it until through college. Somehow they kept making the team, and they just kept practicing and making it. So if you're my oldest is 8 years old. If you looked at an 8-year-old and said, hey, this kid's a failure, because he's not good at baseball. Maybe he strikes out a few times in a game. It's like, that kid is not good at baseball. He failed. That's a really weird way of measuring, one, failure itself, but then also failure in baseball. Maybe you should zoom out and look at the kid, who succeeded when now we look back and they're 26. The kid who was really good when they were 8 years old, maybe peaked at 8. And the kid who was really bad at 8, he was just getting started. But then you have to look like, okay, well, is baseball ultimately the success, or is that the measuring stick of success or failure in life? Like, well, maybe one kid played varsity baseball, the other kid, peaked at 8 years old, but both of them now work 9 to 5 jobs. And one of them is is divorced and doesn't know his kids and is a drunkard and a terrible person. And the other one is a great husband and dad and a great part of his community. Like, okay, who succeeded then? What's your definition of success? So again, time frames and even how do you define what is success for this asset or for this use case? Total side tangent, but helpful to understand what we are defining.
I'm very curious to see how, based on your tweets, based on your interviews that you've done recently, you're obviously very Christian, you believe in God and Jesus. I just recently got into the word, and there are a lot of parts in the word that have made me think twice, at least, about money and finance. How do you speak to people about that? Do you integrate that in any way? How do you blend these two aspects of your life, the spiritual part, the faith part, and the money part? I feel like that, to me personally, I feel like that's challenging, and I'm kind of curious to see how you see that.
Yeah, gosh, I can answer that from 1,000 directions, and we can take that so many different ways. I think as you start pulling this thread of like, what is money, or, you know, what does it mean to be healthy based off what the government's been telling me, what I've been told my whole life versus what I'm starting to understand, or what is healthy for society. You know, we've been told that individuality and doing your own thing is good, but maybe it's actually like investing in your family and getting married, having kids, and not having everything done your own way is actually better for you and better for society. And I think people are starting to question things. And it's unfortunate when I see people who are into Bitcoin stop pulling that thread of what is truth when they get to Bitcoin, because that's not even remotely close to it. You know, like Bitcoin's money. That's it. And I think my problem I have with financial planners who won't even consider Bitcoin is because there's lack of intellectual consistency and lack of intellectual honesty. You know, they'll dig in deep when it goes to wanting to understand all the new tax laws with the One Big Beautiful Bill Act or the updates it's going to have on estate planning needs or whatever. But when it comes to Bitcoin, they'll dismiss it with some goofy catchphrase that was debunked in 2014. And at least have some more thought into it, like answer with a better objection than that, at least. And I think you see that pretty regularly with people when it comes to spirituality, with God, with who is Jesus. This lack of stopping to ask, okay, why do these people believe these things? You know, it's like, well, I don't like your God because how could you allow these bad things to happen? But if you don't believe in God, I don't personally think that you have even the right to declare something as being good or bad. Like that those words should not exist in your vocabulary. Right and wrong, you have no authority to make that call. That does not exist. Evil does not exist in your framework if you do not believe in a God. If you do not have a moral lawgiver, you do not have a moral law. Or if your moral law is subjective, what's to say that your moral law versus the person with bigger guns' moral law is right or wrong? So, and if you cannot have the intellectual consistency and honesty to admit those things, well, we have some problems. And, you know, I think that you're starting to see that. You have these big atheists that were really like prominent in the 90s and the 2000s who are starting to come around. And like Richard Dawkins is admitting that, wow, I wish that Europe at least was culturally Christian because the implications that has on society. And he did not think fully on recognizing that without, again, a moral law is healthy. And the teachings that at least Jesus had is healthy. The problem is Jesus was not just a philosophical teacher. He did not come to make your life better. He didn't come to give you some pointers on how to have a healthy family and to do better and to make your life okay. He came to point out that you are dead and that you have a massive problem that you cannot solve, and that's called sin. And the Bible says that the wages of sin is death, but the gift of God is eternal life. And he said that all have sinned, and that he's the way, the truth, and the life. That no one can come to the Father except through him. So he came to point that out. Like the whole Old New Testament. Like if you want to go down a rabbit hole, like yeah, Bitcoin's a fun rabbit hole. Like I've gone down the old forums on on the like Bitcoin forums and all these things. Super fun. It's incredibly neat to look at the conversations that are had and what's been built on it to where we're at now. But imagine being able to go back through thousands of years of history and seeing this weaving of narratives of a law of, wow, these sacraments that, what is Passover and how is Passover fulfilled in Jesus, that he's the perfect lamb who was sacrificed, that the place that you could gather with God was protected this huge veil because he was too holy for us to approach. But the day that Jesus died, the veil was torn from the top to the bottom. That the fulfillment of a covenant of ability to have a relationship through Christ was fulfilled on the cross. And this is not just biblical scholars. The people who are atheists and just general like historical scholars themselves essentially have consensus that a man named Jesus truly lived. And it wasn't just a guy by the name of Jesus, but someone who at least supposedly performed miracles and who supposedly was crucified and was supposedly raised from the dead. If you could ascribe that raised from the dead due to a swoon theory, like, oh, well, he was not actually dead. He was just crucified, stabbed in the side to prove his death, laid into a tomb for 3 days. And after 3 days, he woke up, felt better, and walked out, magically rolled a huge boulder to the side and walked past some Roman soldiers. That's a swoon theory. If you believe that, like, I think you've dug your heels in. You want to believe that. And these are not necessarily just Christian historians who say that, yeah, Jesus was real, supposedly performed miracles, supposedly was crucified, and supposedly raised from the dead. So you look at that from a historical standpoint. Then you also look at through like the narrative standpoint of the Bible. Like, what was the law? The fulfillment of the law. You can look at it through the prophetic view of the Bible, like thousands of years before crucifixion existed. There are chapters in the book of Psalms. It was written way before Jesus and crucifixion existed. The process of crucifixion existed, spelled out this is going to happen. And I think it's incredible. Then you look at from a philosophical perspective, from a moral perspective, like, again, going back to the problem of good and evil without the recognition of a good and a right and wrong moral lawgiver. There's so many times that people have just hollered out, oh, you're just providing God in the gaps. You don't have an answer. You just throw God in as your answer. But I think we're starting to see this time in the gaps. Like, okay, what's your solution to nothing becoming something? No, just give it enough time. Okay, that doesn't solve anything. And you still have the problem of nothing becoming something. Even if you take the smallest form of something and becoming everything, that still started with something. Well, what about, we could have multi-universe theory? Well, goodness, now you just have multiple universes to speak to. Well, maybe what we have right now is actually just some simulation theory. And this was an alien simulation that was run hundreds of thousands of years ago. Okay, well, what created that alien? Okay, maybe it's string theory. You are filling in your thesis in the gaps. And I think that God is the most logical place to go. And when you look at, okay, who is a God? I think that Jesus being who he is, the historical analysis, the prophetic analysis, all these things behind it provide that Jesus Christ truly is God. And if I actually believe that, then I should say, okay, well, if you really are God, then, and you said these things about who you are, I should believe them. And instead of saying, well, I think that Jesus is God, but I think that he came to fix the money problems to make me do good things, instead of saying that, no, he came that I should follow him, that I should die to myself and take up my cross daily to walk with him, well, I should do that. And if you say I should live a certain way, then I'm going to do that. Like, that's just logically consistent. It's tough. Like in the amongst a lot of Bitcoiners, you see this a lot. It's like, oh, Jesus came to fix the table weights. Like, dude, Jesus doesn't care very much about your money system. And I see this, like, there are a decent amount in Bitcoin Twitter, Christian people who sit there and abuse scripture for their personal financial betterment, and to fulfill their Bitcoin thesis. Jesus said, render to Caesar what's his and render to God what's his. Well, what belongs to God? I wish they would ask that question. What belongs to God? Everything. Give God everything. Render to Caesar what's his. And I see this, it's like, well, that's nothing, because nothing truly belongs to Caesar. I don't think Jesus was saying that. Like, we have too many other scriptures in the Bible who say, like, hey, you should be a great citizen. Even if it's undue, like if a Roman guard comes and asks you to walk with him a mile, do it 2 miles. That's abusive. And he's not saying, well, we should go and riot. He's saying, hey, do it, go 2 miles. If someone takes one garment, give them another one. If you slap them in the cheek, give them the other one. They're not saying stand up for yourself. I'm not a pacifist, but I don't want to sit here and pretend that this Bitcoin thesis is more important than Jesus's words. Again, especially if you're sitting here saying that you follow Christ. And if you don't follow Christ, I would argue that you should pull on that thread. Like, okay, if it is I can't follow God because he allowed this to happen. Okay, what ruler are you using to dictate whether that's good or bad? Because in my opinion, you don't have the authority to make that statement. I don't like the idea of Jesus being God and saying these things, because if that's true and my grandma wasn't a Christian, therefore my grandma's in hell, therefore I want to reject that. That's not how truth works. If Bitcoin truly is the best form of money and that fiat will go down, there will be people who are not early on that lifeboat. Like, okay, well, then we shouldn't have, like, Bitcoin isn't really money then. Like, you can't rewrite narratives based off what's convenient for you. I'm sorry. So again, if it's historical, like, again, go down that rabbit hole. Like, okay, well, what are these sacraments? Like, who did Jesus say he is? What did the Bible lead up to saying that? What did he come to fulfill? Was there anything historically that would lead up to this event of his life and crucifixion and resurrection? These disciples who followed him his whole life, why were they all willing to be martyred for their faith? If it was mass hallucination, one, there's never actually any confirmed cases of mass hallucination ever. Like, that doesn't exist. But if you say, well, it's mass hallucination and these people were a cult and they wanted to spread it for their own benefit, you don't see that in other times where you don't have any person who doesn't come out and say, okay, I made it up, I fabricated it for my own well-being. But instead, they all are willing to be killed for the story they supposedly made up. No, they came further entrenched. And these are people who, after Jesus was crucified, went back to their own lives. Like, I guess I'll go fishing now. The guy I've been following for the last few years were killed. They go back to their old lives of fishing. Jesus comes, they see him resurrect, or they see him after resurrection. They see him ascend to heaven. They say, well, goodness, I got to go tell everyone, I don't care if I get pulled apart and lose my life for it. Something happened. You have to answer to that. What is that happened? I think there's too many reasons to sit here and just brush it off. And if you are going to brush it off, at least brush it off with something better than Bitcoin as Beanie Babies or tulips. Like, that's weak.
Yeah, I think there's 3 topics that I think people that are seeking truth end up on, right? At least for me. And I think I started from the Bitcoin lens over the years, and I kind of see different people kind of land at the same thing. So it's always Bitcoin, carnivore, and God. Those are the 3 things. And I think that people that basically land on these, they're seeking truth. So I don't know does that make sense to you?
Yeah, for sure. And with that, yeah, I see that a lot in Bitcoin, and people are like, oh, Bitcoin caused me to want to go into spirituality and explore that. But if you stop at spirituality, again, you're intellectually wanting still. Like, if you're truly asking, like, okay, Christianity takes a lot of criticism. Well, how do you know that Jesus actually existed, or he is who he says he is, or maybe Christianity was hijacked by the early church, or maybe 1,000 things. Like, what about this? And it's like, well, have you put that own critique on your framework? It's like, oh, I don't believe in Christianity. I can't support that through historical analysis. Like, what do you believe? Oh, I believe in reincarnation. Like, do you have any historical, scientific, prophetic, anything that would justify that belief? Are you providing the same level of critique and analysis to your framework that you are to Christ and his claims? And if you measure those up, I guarantee you 10 out of 10 times, like, the narrative of Christ wins out. It's like, oh, I believe in more something new age, like spirituality and energy, and we're all part of something together. It's like, that sounds cool, I guess. Why? Why? Like, how does that answer anything about evil existing? Do you think that evil exists? How do you answer that? Energy. Like, okay, what is energy? What's the source of this? Yeah. No, I don't hear people beating up on new age people about their initial like source of energy or creation. They don't take the heat that Christians do, and they couldn't provide the answer. So again, if you're exploring just general religion or philosophy, I think that's something that's really dangerous right now. And I think you see this amongst a decent amount of Bitcoiners who are wanting to like be better dads, better husbands, is stoicism. Like, man, you know what? Just be a man. Just do it. And I think it's this push against soft feminist pressured culture that we've experienced for the last several decades. And it's this push to like masculinity, and stoicism's a somewhat valid answer to it. But I believe it's massively misguided. The whole premise is like, you're strong enough, pick yourself by your bootstraps and just do it. And I'm here to say, and Jesus is here to say, you're not strong enough. You never will be. You cannot do anything on your own. You need to die to yourself, and you need someone else to save you. Like, that's the solution, is you can never be the solution. And to admit that and say like, all right, I'll never measure up. I need Jesus. Like, that is the solution. Stoicism, I think, is a dangerous, I don't know, false solution that's rearing its head right now in culture. Again, the thing it's trying to come up, I guess, be a response to are things that I would equally stand against. But I don't think Andrew Tate or these people are the proper solution. You know, the proper antidote to hyper femininity in culture is not a false masculinity. You weren't made to have everything be about you. And that's fortunate. If everything was for your pleasure and for simply your benefit, I don't think that'd be healthy. And also, you're not meant to be the ultimate hero, which is great. Like, I would never measure up to be the hero, the savior that my family needs, that society needs, that the world needs. Like, I'm too flawed. I'm imperfect. And I'm so glad I don't have that pressure. I'm so glad I don't have the pressure of like, this is all about my well-being. You know, like, how empty is it to constantly pursue your own fulfillment? And that's an odd part about my job. A lot of people come to me. It's like, well, I want to use my money for what I value. And it's like, man, it's not all about you though. You know, we can't have this mindset of feeding lust. And those lusts could be fine things, but if it's constant self-gratification, that's ultimately, in my opinion, going to lead to further dissatisfaction with your life. You know, you can search for fulfillment in anything, and I think at the end of the day, you're going to come finding yourself empty until you find that, and ultimately what was meant to be, and that is union with Christ. I think that's why, you know, God created man, is for that communion, for us to enjoy being with him and to bring him glory and honor and praise. Like, that is our primary job. And life is going to stink. There's going to be really hard times, and unless you can look back and say like, all right, God, like, you're good. Like, this situation might not be good. This is really hard. I need to die myself. I have 4 kids. I have a wife. Like, my job is not for them to serve me. My job is to serve them, to love them, to build them up, to edify them, and to glorify God in the way that I treat my wife and the way that I serve my kids. So if I sit here and this is say all about me, I can get really frustrated with my wife and kids constantly, because they're not there my kids are not going to be constantly wanting to serve me. But if I can sit here and say, God, you created me to love and to value and to steward and to build them up well for your glorification, like, that changes my perspective. Suddenly I want to serve. If I can look around and say that to other people, like, man, this isn't about me. This is like, take up your cross and follow me daily. Like, whatever I do it for the glory of God. Like, if it's something that's simple, or if it's something big, like, it's not about me. Like, he's the hero. I don't have to be the hero in this. And that pressure is alleviated massively. I would be the worst hero ever. So would you. And the good news is you don't have that. Like, you can't. And yeah, like, I don't know. Again, the gospel is not, you know, you were pretty you were okay, but now God made you better. You partied a lot in your teens and 20s, but now you have kids, so you can get better. Now you have kids. The gospel is used to be dead, and now you're alive. You were lost, and now you're found. You were blind, but now you can see. Like, that's the good news. Like, God is here to actually restore you and make you whole, not to make you a little bit better. And that wholeness and restoration in life comes only through him. He didn't come to give you a better life. He came to give you life. Without him, you're dead. Like, again, the wages of sin is death, and sin, we've all done it. We've all sinned. And the just payment of sin is death. And the only way that you can have life is through him and to truly live. That is the gospel. That's the good news. And you can't get that. Like, I praise God, my 8-year-old like came to know the Lord last week, and we had this conversation of, well, why do you need Jesus? Like, just do it better yourself. And he's like, Dad, I never can. Well, then go sacrifice something else. None of those things are perfect. Okay, well then, why don't you just believe in something different? Like, who cares? Like, ignore this. It's like, God, I can't ignore truth. Okay, well then, what can satisfy this? Only Jesus, who came, lived a perfect life, died on your behalf because he loves you and wants to restore you. Okay, well then, give him your life. You can't just believe it intellectually. Satan saw Jesus die. Satan saw Jesus resurrect. He saw him ascend to heaven. So Satan believes it intellectually, but he'll never bow and say that you're Lord, your way, not mine. And that's the difference. We have to recognize it, that Jesus Christ did these things. He is who he said he is, but also say it's your way, not mine, your Lord, and your way. Like that's what it takes. It's that easy. It's the most simple. It's the simple gospel. It's not about doing things. Like, you can't do reparations. You can't do things good enough and make, Jesus does 95%. You have to do 5% of doing better. Like, no, it's 100% him. And then you do nothing. So say like, thank you. It's such good news.
It really is. It really is. It's funny, but I can only speak for myself, but I feel like I wrestle with it a lot, because I guess deep down inside, I feel like I still want to be in control. As a business owner, you always want to, you're the one creating, you're the one doing things, you're the one that's starting things, you're the one that's making things happen. So you want to take control of it. You want to take credit for it. You want to do this, you want to do that. And it shifts your mind where it's like, whose is it at the end of the day? Everything is God's. So you're just a steward, like you were saying. So it shifts your mindset from being an owner and ownership to you're stewarding these assets. You're stewarding these things that you're in control of it at the moment, but at the end of the day, you can't take everything with you. So you're just stewarding this whole thing. So that mind shift for me was a big one. And I definitely have, I call it idolatry, because there was a point where I was like, I just like obsessed. I would have my iPad permanently on, like by the nightstand, just staring at the price of Bitcoin and different assets and stuff. And it's like, looking back, that was my altar. I was worshiping Bitcoin. I was worshiping Satoshi. I was worshiping all these Buffett. I was worshiping all these things, my business and whatnot. And my focus was just completely wrong. Do you even introduce the idea of giving back? I had this conversation with somebody recently where the conversation was about tithing and 10%. So they were saying 10% is the Old Testament, the New Testament based on Jesus is you give what you can, how you can. If that's really how it is, you really should be giving more than 10% if things are going well, right? Because if he brought such good news and things are going so well for you, why limit yourself to 10%? You should give possibly more, right? So I think the answer that people really want to hear, it's like, okay, well, maybe 10% is like my cap, and I'll stop there. Does that make any sense?
Yeah, I mean, gosh, there's so much to speak to there. Like, I mean, Jesus, when the Pharisees that came, is like, hey, you give of your mint and your dried goods and all these things, but you don't do these other things. He didn't say that these are bad and stop doing these and start doing these. Like, he didn't tell him to stop doing that. Like, it's good to give. Like, sure, be generous. I personally, this is obviously in-house conversation, not a like in-house in faith conversation of the tithing percentage. Like, I personally don't believe that 10% is New Testament command. I think that we're commanded for a few things for giving. One, to do so cheerfully, that we're supposed to do through like so joyfully, that we're not supposed to let our right hand know what our left hand is doing. So you need to do so in secret. That you should give generously and abundantly. If that means that you're giving less than 10%, if that means that you're giving 50%, you need to do all things unto the Lord. And if you allow yourself to get wrapped up in like 10%? Like, all right, is it 10% pre-tax, post-tax? If you own a business, is it gross revenue? Is it net revenue? Is it my take-home pay? What about my profits on my Bitcoin? Is it only when I harvest those gains, or is it unrealized gains? You can become super religious in that. And got caught up on the wrong thing versus like, wow, God, you have given me so much. And I mean, when you look at the New Testament teachings, we're primarily instructed to take care of other believers. And of course, we want to give to non-believers, and I want to share the gospel, but primarily it's there to take care of other believers. Like, hey, if there's a widow in the house and they're too old to get remarried, like, go take care of that widow. If they're showing that they're in good faith, go take care of them. Or, hey, let's collect money to send to this church as they plant. And, we're going out to build another church in Ephesus. Let's go give money to them. Like, it's a lot of in-house stuff. And I look at this, it's like, man, I have more than I need. God, how can you use this? I see someone in my church who is in need of a new car, or they're coming up short, or I want to send people to go and share the gospel in Uganda, or my pastors. I wish they had more time to be able to not have to work a job and go study the word to come and preach the gospel or teach us on Sundays. Let's go ahead and give more so the pastors can do this as their full-time job. Let's give. And that should be motivated by this internal thing of like, I want to do this. Now, with that said, the Bible also says, and people say this backwards all the time, but where your money is, there your heart will be also. So there's times it's like, I don't really want to give. Well, okay, well, it's maybe because your heart's growing hard. It's like, well, put your money there. Like, what's important to you? This could be a non-Christian lesson as well. It's like where your resources are, you're going to be focusing a lot of attention there. And if suddenly you're diverting resources to the Lord, or if you're diverting resources to like a local park, you're going to want to see that park do better. You're going to want to see like, hey, like you're probably going to spend more time there. It's like, hey, God, like I want to give you more of these financial resources, but then I also want to be more involved in your kingdom. And I think it goes both ways. I should be like, when you give your life to the Lord, that means you give everything, and financially, emotionally, relationally, spiritually, whatever. Like I'm no longer my own. I belong to you. And And unfortunately there's, we have an entire book, the book of Proverbs, which is like just all about wisdom, like wisdom literature on how do I take my free will and my ability to make decisions to do that properly in a way that's glorifying to God and just like wise. There's a whole book about that. And the book of Proverbs has 31 chapters in it. And since I was in high school, most of the time, there's been times I've taken time off, but like most of the days I'll get up and I'll read the proverb of the day. So like March 19th, read Proverbs 19. Like, all right, cool. That's a really good way to get, people call me a wise guy. I'm just kidding. Wise guy. No, like if you want wisdom, like cool, go read Proverbs. Navigate. There can be a good way of navigating these decisions. Sorry, a lot of different tangents.
Yeah, no, it's great. I love it. I mean, it's just, again, I'm pretty fresh to faith. I mean, it's probably been maybe 4 months, so I'm still navigating everything. Probably 50% of the views is going to be me rewatching this. But I appreciate your time. I know that we've gone way more than we've originally talked. So I want to thank you for your generosity and time, for saying yes, for dealing with the technical difficulties that we had. You're an awesome guy. You're a wealth of knowledge. Can you tell people how to find you?
Yeah. So my Twitter is at Jim Crider TX. My financial planning, our website. So my financial planning company, as mentioned by Tony at the get-go, it's Intentional Living FP as in financial planning. So our website is intentionallivingfp.com. And if you, on there, you have our calendar. If you want to schedule 15 minutes, even if you're like, man, I just have these 2 questions. If I get these 2 questions answered, that's all I need. I don't want to hire a financial planner. Throw 15 minutes on our calendar. We'll do our best to answer those 2 questions for you. Or if you want to talk about working with us, more than happy to have that conversation too.
Everybody follow Jim. I'll put all the links below. I'll put the links to his website, to his Twitter, to anything else he wants to share later on. Like and subscribe to myself, to Jim. I think, Jim, you have a channel as well, right, on YouTube for your...
Come on there. We'll start producing again.
I'll put the link.
Yeah.
I'll put the link and everybody should watch it there. Thank you, everyone. And thanks, Jim.